Hey everyone, welcome to a Optimum FX weekly analysis. Today I'll be covering major currency pairs, gold and US 30. I'll be going over what macroeconomic data will be released this week. After I've done that, I will go through the charts and map out certain levels of interest and mapping out trade ideas, potential trade ideas with the correct fundamental and technical confirms. So firstly, let's see what data we have been released this week. So this is essentially the final week of the month. We've only got one day next week, which will be Monday the 31st of May, when this decides to load. Give me a sec. Alright, yeah, so we only got one day in the month next week, which is on Monday, but so essentially this is the last week of the month. So let's quickly just have a look at what data is going to be released this week. Alright, so on Monday, Monday's a very quiet day. We only have Chicago Manufacturing Index data. On Tuesday, we do have Red Block Index, annual reports, Longwood Housing Price Index, new home sales, and consumer confidence. These will be all monthly reports. We do have mortgage applications on Wednesday, Fed members speaking, crude oil stock exchange, and on Thursday we will have a bit of volatility and volume with US dollar. Firstly, we do have durable goods orders, personal consumption expenditure. Though for those who don't know, personal consumption expenditure is a good way to measure inflation. I do understand, like everyone says, oh, CPI is the main indicator for inflation. You're wrong. You're wrong. Personal consumption expenditure is probably like the best indicator to understand or to measure inflation on a monthly basis, and we got to understand that this is a quarterly report as well. So this is going to be data from the past few months. Okay, so yeah, so we got to understand that this data is going to be very, very impactful, and we must understand that last month when those figures did come out for CPI, it did come to 3 to 4%. Obviously, that is priced in at the moment, but just like a heads up, when you want to start discuss about economics, or when you're trying to dissect reports or data and understand what they mean. Personal consumption expenditure is probably one of the best indicators to understand or to measure inflation. Okay, and the Feds actually prefer to use the PCE data rather than the CPI data. Okay, so moving on, we do have countless jobless claims, GDP data. We do have capital goods orders, pending home sales, and we do have Treasury Yellen speaking. Fortunately, probably she's more than likely just going to be just giving an update on these reports, and not really going to change much of their scripts. Just keep it a dovish tone, like they have been for the past few months and so forth. So nothing really new there. We do have Kansas Fed manufacturing index as well. We do have PCE price index data coming out on a yearly basis. We do have wholesale industries on Friday, personal income, trade balance data, and we do have the Michigan Consumer Sentiment Index and Baker Hughes oil rig count. So there's plenty of data coming out later in the week. I'm not going to be expecting too much movements on Wednesday nor Monday. Probably Tuesday we'll see some volatility because we do understand that housing price index pretty much just shows us the level of consumer confidence and consumer spending in the economy. We do need to understand that we did have data coming out on Friday last week saying that home sales has gone down from the previous month after it's spiking up to multi-year highs. So yeah, just remember that in the back of your head when this data does get released. Okay. So in Europe, we don't have much coming out. We only have data coming out on Friday, which is consumer confidence, business climate, and economic sentiment indicator. So yeah, and all that data's coming on Friday. So yeah, it's gonna be a very light calendar week across our major economies, except the US. So let's go to UK. We do have public sector net borrowing. Subsequently to that, we do have central bank members speaking. So nothing much happening in UK. Japan, we do have a bit of data being released this week. Start the week off, we do have Bank of Japan Governor Kuroda speaking. On Wednesday, we do have leading economic index along with foreign investment and foreign bond investments. So on Thursday, we do have CPI data being released and your unemployment rate, which is going to show a lot more volume and volatility with our Japanese pairs and Japanese stock market. We must understand as well, Japan has been the Bank of Japan has really been downplaying the economy itself, saying it's going to take a lot of time to recover. And especially that, and then with that being said, I'm expecting the unemployment rate to be dovish. But I'm not going to say it is going to be, that's just my forecast and expectations, just off the comments that have been made from the Bank of Japan itself. So that being said, yeah, we are going to expect some volume and volatility during Thursday session. So on Friday, we do have annual construction orders and housing starts, and that's all we have for Japan this week. So lastly, we'll just go to Australia. So we do have monthly leading index along with construction work completed this quarter, which is all on Wednesday. So on Thursday, we do have private capital expenditure. So there's not much really happening in the Australian economy. So now we understand what data is being released this week. So let's dive into the charts and map out, certain key levels of interest and map out potential trade ideas with the fundamental confirms and now with the technical confirms. So firstly, let's go on Australian dollar. So Australian dollar has been bullish ever since the vaccination rollout. We did have the strong bull run here. We did retraced, and then we did continue this bull run. I believe this bearish run. Sorry. So moving on. Yeah. So with continued optimism with the vaccine rollout, we did see the Australian dollar had a strong bullish run, and now we are consolidating in this range after reading the 80-cent mark. We're now consolidating in this range. As we can see here previously, once we broke to the upside of this previous range here, we did come down, consolidate this little area here, come down, failed to break below of these key levels of interest, right? So after we've consolidated, we've actually come back into this little area here, which was this previous level of interest and these levels of interest. So that being said, when I'm looking at the Aussie, right, so we're in this indecisive range, okay? We see US dollar weakness, obviously with good US data, and continued weakness with the US dollar. As we can see, we have been in this strong bearish corrective structure after reaching these highs, and now we are starting to bounce off these yearly lows, right? And we must remember that this is the 6-yearly low on the US dollar index, right? So we must understand that, okay? So that being said, with continued appreciation in our commodity prices like for instance gold, silver, copper, iron ore, coal, we can see a lot of appreciation with the Australian dollar. The only bad thing is, there is a bit of trade war tensions between Australia and China at the moment. But in my opinion, that's all transitory. China's just trying to be their own thing at the moment. They're just trying to have their own stance, try and be the alpha, because at the end of the day, we do understand that China wants to be the top economy in the world. And who's the top economy in the world? The US, right? So, there's just a bit of tensions at the moment, but not enough tensions to force the Australian dollar below this little key level of interest, okay? So Now we understand the fundamentals of why the Australian dollar has appreciated and understanding why it's in this indecisive range on the higher time frame. Okay, so what I'm looking at with continued optimism in the Australian economy, we must understand as well. Last week we did have good unemployment numbers, and from the RBA's minutes last week, they were talking about wage price index to be at its decade highs this year, to boom the economy, or to not boom the economy, to more or less stimulate the economy, right? So with that, that provide optimism. I believe this is the reason for this spike up, but we can see we have retraced and we have now corrected this move. So my bias on here is I'm still bullish on the Australian dollar, right? What I'm liking is how the final 4-hour candle of the week closed bullish, right? So what I'm looking at, if we do retrace back to, let's say, 77 flat psychological price level, we could get an aggressive bounce back up. And if we get some nice candle bodies at the key level we're at right now, 77 300, we can see continued buying pressure up, of course, with US dollar melting. Okay, I don't see any strength with continued optimism in the US economy, because we do have to realize there can be a bit of confusion, right? So when US dollar is positive, it doesn't mean a US dollar is positive, because you've got to understand that US dollar is a safe haven currency. I will say this over and over and over again, because I feel like, in my opinion, not many people are aware about how this data, certain data and certain reports is pricing into the market, and how certain markets react, right? Because we all understand that. All right, for instance, if we go on the Australian dollar, right, if we see positive GDP numbers, trade balance numbers, CPI numbers, employment numbers, Australian dollar is going to appreciate. The US dollar will do the inverse, because it's a safe haven. Because if you go and back test it, look at any crashes in the market, you'll see US dollar appreciate, because it's a safe haven currency. You got to understand that investors put their money into the US dollar in times of fear and uncertainty. So you just got to understand that. And then with positive reports in the US economy, what does that do to the US dollar? It depreciates. Like me, from observing the market, what you're going to see is, when you see positive data, like you might see like a massive, like not a massive, but you might see like a spike up, like this spike up when the data is positive, and then it'll just correct. It's just like, to me, it's just more of a liquidity grab, and you'll notice these liquidity grabs happen on certain technical levels. Okay, so that's just a bit of knowledge, because in my opinion, I just don't think many people are aware of how certain markets react to certain data. Okay, because we gotta understand that the market moves, or is derived from data. Okay, it's derived from macroeconomic data, because like, you're trading a currency of an economy. Anyway, so that's another story. So what I'm trying to get at here is, like, so I would like to see a nice candle body close above 77 cents psychological price level. If we can rally up, and if we can break and retest above 77.3, I can see continued buying pressure up with US dollar weakness and optimism in the Australian economy. Just, you got to be cautious with any speeches from the US government or central bank members, and as well with the Australian economy, right? And of course with any trade tensions. Okay, that's what we got to understand. If we do have any negative headlines in regards to Australia and China, in regards to trade tensions, we can probably see a spike down in Australian dollar, but we might see that easily corrected with the continued optimism in the Australian economy. Okay, so that being said, I'm liking like a high risk buy at 77 flat, medium risk buys at 77.3. I do want to see this. I do want to see a bit of a pullback on the weekly candle, so we get that lower wick, and then continue buying pressure up. So that's my bias. I would like to see if we can break and retest and stay above 78. 160. If we can get some candle bodies above here, because as we've seen here with this wick in this area, wick in this area, wick in this area, nice candle body closures above here, we did get a bit of a liquidity grab. We did generate a bit of support the other week, but we weren't able to have enough buying pressure to continue the rally up, which is fair enough. Did get the spike down, but in my opinion, once we break and retest above here, we can see continued buying pressure up, and possibly, because we gotta understand this is a key level of interest, right? Once we ran up to 80 cents, we came down, right? Retest this level here, came down, consolidated a bit, ranged around a bit, came back up, came back down, right? So you understand that this is a key level of interest. If we can break and retest above, I'm liking it, right? Like I'm liking longs on the Aussie. So let's move on to the euro. Like euro is very similar, because we both got to understand that. Well, we all got to understand that. Sorry, that our risk currencies, they move, like all of our risk currencies against safe havens, they move very similar. Like if you pull up the Aussie yen, the Aussie Swiss, and put it against the Aussie, against the dollar, like, there's a lot of correlation right there. The structure's like very familiar, and it's going to be same with like EU. Like on EU, we've just had a strong bullish run. EU has been lagging. I will be honest, like EU has been lagging, and I'll tell you why it's been lagging, because like COVID's not fully controlled in Europe at the moment. Like there's still restrictions. Pretty sure France is like literally in the shit at the moment, because like they're still freaking locked down like crazy. But like it just, and then also something to add, like in the European Union, I believe like one of the vaccines, I think it's who is it? I think it's either AstraZeneca or Moderna, and I think they're manufactured in Germany or something, or somewhere in Europe. But like the thing is, they were exported to the US first, which baffles me. Obviously it's a commercial decision, but it just baffles me how they would rather export those export the supply to other countries rather than serve their countries themselves first. Anyway, so as we can see with the European Union, or with EU, after reaching these highs here, we did start to come down. Obviously with here, with this rally down, that's just got to do with Brexit, with the Brexit deal coming together, or UK rejoining rejoining the European Union. Obviously that is good for the European Union, but the European Union was getting a lot more appreciation with negative Brexit talks. Like obviously one country has to be stronger than the other, and obviously that's going to be the UK, right? Because it's actually more favorable for the UK to join back. Okay, so I don't want to get into Brexit. Like that's a whole other discussion. Otherwise, this thing's just going to drag out. So let's just talk about on a technical level. So as we know, we don't have much fundamental data coming out this week. But if we can look at the market structure, we were respecting this high time frame trend line. Then we broke below this trend line. We failed to come back into this trend line because this was an aggressive bullish trend line, right? I wasn't expecting it to hold this whole time, but now we can see it's actually respecting this trend line, right? So now we can see that we're possibly in this new bullish channel, right? With these lows here, these highs here, lows here, failed to come back above here, and now we're respecting this key level. Okay, so if you don't understand the key level, our key level now is 121,730. Okay, which is where we're at right now. So the last 4 hour candle failed to push lower. We did get the strong bull run, right? So what I'm liking is, honestly, I'm liking if we can maintain above here. I don't really want to go back into this range here, because we might actually range down and come back up, or we might come back, break and retest below this level here, come to 120 around 700, and we could get like a high risk buy here, or we could just mess around in this little range, which is not something I'm really favoring at the moment. But since it's going to be a light calendar week, I'm not going to be expecting much volatility. We're always going to have European government and central bank members speaking throughout the week, which will happen. So that being said, I'm liking how we're respecting this high time frame level. So if we can stay above here, that'll be a good buy. I don't really want to sell the euro, it'd be a bit of a counter trend trade. If I was going to be selling the euro, it wouldn't be for long term. So that being said, I wouldn't be surprised if we get like a weekly lower wick. See if we can pull back to this little key level of interest here. These previous lows, right? So that's what I'm liking. Or if we could take the high risk buys to this previous key level, but I don't really see the euro pushing down to this level here. Like, it's obviously derived by the US data that's going to be released this week, but what I'm liking is that if we can respect this higher time frame key level, get some safe counterbody closures above, we can see continued buying pressure up. Obviously, with US dollar weakness. Now the pound is very similar. The pound has been very choppy recently. We can see here that we are approaching this yearly resistance, right? So we did get a hard rejection of this historical key level, right? So we did get a strong rejection. We did pull down, right? But if we can, I'm liking if we can maintain above about 140,900. I can see continued buying pressure up. Obviously with US dollar weakness, we don't have much coming in UK. Sorry, let's have a look. Like we've only got data coming out on Tuesday, and that's just the central bank members speaking and public sector net borrowing, which really isn't impactful, just from what I've seen in the past. But yeah, so I'm really liking buys. Like, your safer buys is if we can break and retest above here. Like, honestly, if we manage to break and retest above here, like this thing's just going to shoot up. Why? Because we did get a hard rejection on this level here, right? But I won't be surprised if we do like a little pullback to this little key level interest here. Won't be surprised if we pull back down to 140,800, right? Yeah, about 14800. I won't be surprised if we get some hard rejections here, okay? Because we're going to understand this is the higher time frame. This is the 4-hour time frame. Nice counterbody closures here, retesting this little, I would say, lower time frame resistance. And we got to keep in mind that this is pretty close to this little high time frame order block, right? We got our candle bodies at 141. Let's just say 200, and we got the highs here at the key level. So what I'm looking, like that'll be a very high risk buy, but there's a possibility that price could push back down to 140,800 and generate a better demand zone for buyers to come in. We got to understand, there was a lot of talking about it on I think people call it a smart money concept. There was a bunch of sell stops at this previous resistance here, and we come back down. But I'm just saying, we continue optimism in the UK economy. If this thing comes to this level again, this thing will just shoot. It will just literally it'll just punch through that level. And I believe in a weekly analysis. Within the previous weekly analysis, I did mention if we did come above this key level here, we were going to shoot up, which we did. Okay. So we got to understand, because we got to understand that this was like a key resistance for a whole freaking 2 months. When's that, March? Yeah, a whole 2 months. What do we do when we finally broke it? We're shoot, right? And now we're finally to come below. We didn't even get a strong retest of this previous low, right? Now we're coming back up. Okay. But yeah, we've got to keep in mind. I won't be surprised if we do a bit of a rejection, but there's a good chance that we're just going to pump through. So that's my opinion. GJ has been in this disgusting high time frame range, right, man? We've been in this tough range for what's that, 2 weeks? Yeah, 2 weeks, man. Disgusting. It's horrible. But what I'm liking is if we can pull back here, generate a bit of if we can see buyers being relieved out of the market, see price get pushed to this higher time frame key level, And to me, this is now a high time frame demand level. I wouldn't be surprised if investors try to push price down to more favorable demand levels so they can get in on their longs, right? So that's what I'm liking. I'm liking 153, 750 for your higher risk buyers. However, if we get some counter bodies on the high time frame and retest this key level of interest, we could see continued selling pressure, see price get pushed to a bit of demand zone, maybe generate a bit of liquidity, form a little range in this area, but I don't really see that happening. I'm more in favored from what I've been seeing recently is high risk buys at this level here, safer buys at 154, 770, right? That's what I'm looking at for. So on gold, we can see we've been on this strong rally up after reaching these lows here. We've been on this strong bull run. With that being said, we've been seeing the US dollar depreciating, it's essentially the inverse. And we've just been seeing gold pumping, right? So with that being said, after we broke, I believe 2 weeks ago in my weekly analysis, you can go back and have a look if you want. I'll actually put the link in the bio so you guys can check it out. So yeah, once we retested this high time frame key level, which would be a high time resistance, we did rally up, right? Did a bit of consolidation, retested this little lower time frame order block, pull up. This was just like a strong liquidity grab because gold can whipsaw you like big time. Like I don't know, like for some traders, especially for me in the earlier days when I was trading, I used to hold like 100 pip drawdowns on gold. I don't anymore. Like if I lose, my stop is like maybe 10 to 30 pips, like max. Because I'm a scalper at the end of the day. Like I'm in and out of the market. So, this is a bit of a fake out. When I'm looking at it right now, it's just a massive fake out. But we can see we didn't break below. We didn't break below. It was just a strong wick down, right? It's just generating. It's just price being pushed down, or sellers just being relieved out of the markets, and the same price get pushed to a bit more better and favorable demand zone. Okay. So with that being said, with gold, if we can see some positive data being released, and with PCE data, right, because that's an inflation indicator, right? So if we see high inflation numbers, I can see gold like pumping and rallying. Why? Because investors use gold to hedge against inflation. That's like one of the main uses for gold. Okay. So with that being said, we are in this little range here. We could come down to 1874, get like a nice retest, and continue buying pressure up. I mean, that's only 60 pips away. Or we could come back down in this range. We could get like an aggressive pullback to this range, similar to here, right? With this little range here, pump up, retest this little range, and come back up. So with that being said, this is a new range, okay? So we could get a high risk buy at 1863, key level of interest. And then your safer buys is if we come up, get some candy body closures at 1887. But I just want to see if we can generate a bit of a lower wick. But yeah, I'm liking high risk buys at this area here. I wouldn't jump the gun like on Monday. I just wait for things to settle down a bit. Just wait for the market just to form a bit of a range. But we know if we this would be a bit of a medium risk buy. Nice counterbody closures above here, and we could continue up, right? So I'm going to dollar. So now we've been talking about trading against the dollar, and it's just all longs, right? It's just all freaking longs. So that being said, we are in this bit of bearish channel, and we do have to realize that with continued positive macro data in the States. So we've continued positive data in the States. We have seen the US dollar depreciate because the US dollar acts as a safe haven. So this week we did get some hard rejections of this key level here, right? After dipping these lows, because we've got to realize last time we dipped these lows, we rallied up, okay? So What I'm more in favor for is if we can break and retest below here. That is definitely a possibility, because we've got to realize, like, we're at this kind of key level of interest, you know, this little range here, right? And of course, this little range here, right? This little previous double bottom on the higher time frame, okay? So that being said, I'm liking if we can remain below this previous high and we can get continued selling pressure, okay, with the right fundamental confirms. If we come below here, this thing's just going to melt. I wouldn't be surprised if this thing just freaking melts to 89.26, right? So that being said, I do want to see how we react when we do come down to this level again. I'm not looking for buys. I'm not going long on the US dollar. You know why. Market's optimistic, the market's on a fear mode. That's essentially why. Okay, so I'm just being cautious how we react. We might get a high, we might get a weekly wick to the upside. If we stay below the previous high, you know, that just safely confirms to me for continued selling pressure. But yeah, so I would want to wait. Like we would see like a strong pump in our risk currencies if we come below here, which really favors our pound analysis, right? Pound US analysis. More than likely, that's what it's favoring at the moment. And gold as well, you know, it's especially with gold, if our main confluence at the moment is buying gold based off the US dollar depreciating, okay? So with that being said, not looking for any longs on US dollar, mainly looking for shorts.